recording. All right, looking at what's happening. Who's playing with the music board? Yes, set pauses for everyone. Where's the thing now? The queue has been cleared. Stop playing with the music board. Otherwise, I have to change the permissions. Play. If you don't want to hear the music board, simply do the right click right here and put the user volume to 0. And don't play with these buttons. So you can simply, if it's too loud, put it to like minimal background music or simply turn it off and you don't hear it. Or simply put my, I can't do that because can't put that for myself, but do the same thing, right click on me right here and then put the user volume or increase the user volume, and then that should work perfectly fine. All right. Yes, we already took out the previous day's low. That's done. I wonder why it's showing us the previous, because that's the previous day's low. Makes sense. We sold off during Asia very aggressively. Vroom. Trapping traders short below the previous day's low, and then we put in the W formation from the market maker model. Time is 2:45, so we still have some time to go. I missed this entry here for the topstep account. Well, we'll see. Might get lucky. Sorry, we haven't confirmed the structure shift yet. I mean, even if we do, yes, now we did. We already filled the bearish fair value gap up here. Did we? Yep, perfectly. 50% filled as well already too. No, not really interested in that. Someone hit the button. Alright, I just have to modify that not everyone can play with that. That's just super annoying. Can I put that in here? No, I would have to modify all the settings, which would take some time. So don't play with the bot. Otherwise, we have to go away from the charts and can't really focus. That's not really the purpose of the bot. All right, we took that previous day's low. Inversion fair value gap. Bullish fair value gap, wicks to the downside, pin bar up. We continued up higher slowly and slowly. This is how we can tell we're in bullish order flow really. We can't maybe say for sure that we're gonna hold right here because there's just too much to the left. But once we continue higher, and keep using bullish fair value gaps as support, continuing higher. Here we didn't really use this bullish fair value gap, we just tapped it. Continued higher, using bullish fair value gaps as support. That's just beating the purpose to me. We might get a pullback to stop some traders out who got long on this move to the upside. But yeah, I'd say I'm not going short before we take that buy side. We have, we took this one right here. Overall, I'd say today I'd be entering the market with a short bias. I think the high of the week, or at least, yeah, I'd say the high of the week has been put in place with PPI news. If we look at the weekly template, Monday range, Tuesday expansion, Wednesday range. Of course, could be wrong and we simply keep on rallying. Wouldn't really be surprised if we look at the daily. That's where we're currently at the daily. So we rejected already from our 4-hour bearish fair value gap. Still below that daily bearish fair value gap. We have September highs up here. Our trend line, we already said goodbye to that one. But eventually it's going to be time for the pullback. Can also take a quick look at the DXY before London opens up. Don't need to worry about that for a little while. Inversion fair value gap, and new CPI news from Tuesday. Bearish fair value gap right here. We already took yesterday's high here on the DXY, right here. But I'm not going to use the DXY for much confluence. Just look at the bigger picture. Overall, I would still target the 103 levels right here on the DXY, this sell side mainly, and the 50% of this entire move to the upside. So far, we've been respecting the 50% levels perfectly. From the top to the downside, we hit that 50%. I think that would be a healthy target. NQ, daily time frame. Hit the daily volume imbalance. Let's check out the weekly. Really not super far away from making a new all-time, not all-time high. Oh yeah. No, not all-time high. Let's check out the monthly. Monthly bearish fair value gap coming in right here. We already tapped that. We will see. I will cover all these higher time frames again in the weekly outlook on Sunday. All right, but the sole focus is going to be on ES. No point in getting involved in this job. Asia session high came in right here. So theoretically we swept the Asia session high, but I don't know. I think it's hard to draw the line. Say that's the Asia session high. I'd be more interested to see the high of the day, which was 40 minutes before the Asia session open at 8 p.m. New York local time. But overall, if this fair value gap holds up, we're going to see the new day opening gap, this gray box here revisited, and also these lows right here. See what we do around the VWAP and the midnight open to shoot back up. Stop some traders out, fake them out to the downside, shoot back up. One push, two push, third push below the previous day's low. After 3 pushes, we push back up. Not bad. If you don't know what I'm talking about, that's mainly from that video I shared from a little while back inside the VIP chat and the general chat. that how to beat the market makers video. It's long, yeah, but if you have time on the weekend, it's a good watch, I'd say. Yeah, definitely. Yeah, not gonna trade the Scalper Pro today, I think. But this would have been the trade. Equal lows right there. London open in 2 minutes. I think we would have gotten a chance if we would have used the bearish fair value gap entry most of the time. Just that wick to our level without having to overshoot it is enough to get us filled. 4 points until New York midnight. 15-minute time frame. Yep. Potential market structure shift on the 15, but on the 15 we see so far we only wicked. Gotta get the decision in 1 minute. And what else do we have around that area? No. A 15-minute bullish. I think overall a retracement would be healthy as a fake out move for early London. But we'll see. I wouldn't trust the 5-minute structure shift just yet. Seeing what's happening on the 15, let's also take a look at the hourly time frame. Bullish hourly fair value gap. Yesterday was really... We've been starting here at 2 a.m. during the London session. We didn't really change even during New York on the hourly time frame. That's real. But that's what we would expect after this. We got something similar after Friday, NFP, but not to that extent. We still moved relatively nicely, but we just have to be aware of that possibility. Or like right here where we had this entire bullish week to the upside, relatively small week right here. That's what we would anticipate. That's, I guess, what's healthy to anticipate. If you would expect the same continuation move to the upside, 15-minute didn't shift structure, nope. Kept holding the fair value gap. Head over to the 5. Let's see what we do in this bearish fair value gap. Next bullish one further to the downside would be right here. Trying to think like the market maker. Market really opened up. Not much volume happening here, but everyone who tried to jump in short right here, maybe they jumped in on leg 2, or very likely on that third push. Once they saw those big candles, like, oh, it's gonna continue to drop. Most of them that got in very late already, maybe getting stopped out with trailing stops. And now most of the longs right now, I'd say, are in profit. So I could see the possibility of a quick stop hunt purge and then we continue up. Very similar to what we saw yesterday, where I scalped the PM session. Where was that? Oh yeah, right here, this drop. If we look at that on the 1 minute time frame, I had it on my chart. Like, I mean, we took buy side. Above buy side, we consolidate, we fail. And look at that, volume imbalance, fair value gap. We tap the fair value gap. We want make one push lower. What do we have at that area? Was just curious if that's playing out. Head and shoulder setup. Almost at the exact low of the left shoulder right here. Pull back, get rid of out of all these longs that very likely enter up here. Because right here it's not really obvious. Push above. They're like, no, I wanted to continue higher. Quickly hunt these and push back up. Without really giving many people an opportunity, even using fair value gaps to get in on this, other than, yeah, pure anticipation or maybe inversion fair value gaps. Look at the 1 minute time frame right now. Little bits of seek and destroy. We form equal lows, take the lows, push back in. More equal lows. Yeah. At that high. But I really don't like the 1 minute time frame for the London kill zone. We can see how scattered it is with all those gaps. So I prefer doing my tape reading on the 5 minute time frame. Hit the 50% one more time. Now we're starting to reject. Confirmation, we could have entered right here. For our 2-to-1 risk to reward, we have to come back to the previous day's low. We hit the new day opening gap, ran this short-term low. Let's see if it's sustainable. YM would have hit the take profit target. Ah, damn it. So YM took the high. Let's take a look at NQ here on the 5 minute. What's NQ up to? Pushing to the upside, retracing it, having retraced a little bit more than ES did. Already taking out all the sell side liquidity right here, and now pushing to the upside. And I missed that one. I did some other stuff before I started live streaming. It's okay. I think I'm up 500 for the week on that topstep at $11 account. Really stupid not to take all these entries, considering that fucks up the stats. Your reality gap. But it is what it is. Alright, nice little bounce off the VWAP. Correct account, yeah. And we're back immediately at the 50% from where we rejected, continued lower. NQ would have hit the 2022 model fair value gap right here. But I'd say it would be a internal structure 2022 model because, yeah, what I always like is a higher time frame point of interest taken out. Well, there's no higher time frame point of interest. On a higher time frame, this is just one candle to the downside. So if we would have seen it above here, yeah, for some shorts, definitely. But yeah, I mean, concept is still there. We shift structure to the downside. And we have a new little bearish fair value gap. But because we didn't really sweep anything major, the only thing that we could look at is a potential 1, 2, 3 drives pattern displacement. But we've already taken out all these lows from this 3 drives. Could even continue further and make a 4, 5, 6 drives out of it. crucial part to really make it higher probability, I'd say, is taking out significant buy-side targets. YM. Take a look at the DXY here. Wicks to the upside. Pin bar. Bearish fair value gap, but also wicks to the downside. Hard to tell here. Keep the 15-minute time frame open. See what we do around this 5-minute fair value gap. On the 15, we've been holding the highest one up here pretty nicely. Let's see if we would have avoided a little loss here. Someone played with the music board. Don't play with the music board. If you don't, sorry, I should have said that. I said it before, but with a few more people watching. Let me start it up again. Play. What did I put in there? Just put that one in there. Once it plays, once you hear the music, you do a right click right here and you modify the user volume. You can put it on 0. You can also do that with me and put me to a higher user volume. I don't hear you, that's why I put it to a higher one. But these buttons, no good to play with. Alright, we still respect the 50% here nicely. We took out the high one more time. Might still end up holding. But I made the decision for myself that I'm not gonna take market structure shifts before the London Open anymore. YM, potential short entry. 3, 2, 1. No, not here. If we would have closed below the VWAP, we would have gotten a signal. NQ rejected very nicely from our bearish fair value gap. So just for the sake of the internal model, stop goes above here. 2-to-1 risk to reward. Bearish volume imbalance. Not worth the scalp yet to me. But being in the short, that would be something nice to see. Bearish volume imbalance. Did someone take the short prior to the London Open? Ryan, did you? Let me check out this gun. I've placed my order but not been filled. Where did you place your order to not get filled on this big wick to the upside? So let's see if we can make a lower low here. 2.5 points. Take a look at NQ. I'd prefer seeing the trap first before I engage if I do tape reading. Like said, not gonna look for shorts on the trade day account unless we take out a proper high. Not gonna play these 2 a.m. consolidation market structure shifts anymore. I think it's not worth it. I prefer shooting my shots on the market structure shifts, even if it means I'm not getting an entry during London. Then it's better than taking a loss during London, because we play these, because we see so many of them during New York, like we saw yesterday. Only a very few amount of them prior to the London Open is actually playing out. But we always like, oh, there's that one that played out, so let's try it in the future. And all of them fail. If I go into the journal, every single one before the London Open failed. Take a look at NQ. Barcoding. Asia range is big this time, yeah. You watched the Market Maker video, Matt. You have a feeling how the Asia range success in the video translate into the future Asia range? How much it should be to expect a rate high low? So he mainly talked about the ideal scenario in that video, where the Asia range is just pure consolidation, where we don't see really signs of market makers being involved. If we do, I mean, even ICT said that if we see a big trend during Asia, let me turn on the kill zone box. Really looking at this main trend right here. How much is that in points? 11 points. Let's compare that to yesterday. Yesterday we also saw a big trend. London chop. I mean, possible to scalp. We tape readed it, but not really a trend. And if we go back to CPI Asia box, we can really see that's the ideal scenario where we chop, consolidate, where we do not trend into one specific direction. But usually Asia down, London up, I guess. Asia up. I think it has to work with the overall context. Drawing conclusions from the Asia session. Of course, you could use then if that during Asia, then that during London, but I think there are more variables involved than just Asia. We can always look at who's likely in profit. Where's the easy money at? Is the easy money up here? Or is the easy money down here for market makers to snatch? Chop. NQ retrace that entire pin bar candle. No wick to the upside. Let's check out the 1 minute time frame. So far in Q, I'd really want to see this 1 minute fair value gap here to be respected. But we have relative equal lows down here. And we already retraced further into this buy model right here after the strong Asia sell-off. That's basically that same buy model that I capitalized on yesterday during the PM session, where I saw that we've rated the low of the day, the Asia session low right here. Was it right here? No, right here. We've took that. I posted that in the general chat. And we continued lower. Then we've got this volume imbalance down here. I've been short from this 2022 model. We took equal highs, 15-minute bearish share value gap. And I liked how aggressively we moved away from that. Close below. 2 bearish share value gaps, volume imbalance to enter on. Chopped for a little bit, but then we got that nice expansion to the downside. took, I think, 10 points home with me, or 7.5. Don't remember right now. Not really willing to add on volume, on bearish value gaps at this point in time. I mean, every single one that we've hit, we continued lower from there. And then I'm at the end, that's psychology, that's how they get you. Volume imbalance. I tried to enter on the volume imbalance with a 2.5 point stop. And I saw this up closing candle and immediately flipped my position long. Wanted to see if we can take out this high. Once we've did that, we open up with a volume imbalance, holding support on the volume imbalance. And at that time, we already saw our market structure shift. And because of what we did the entire day, we take lows and we immediately pull back massively. I was looking for all these late shorts entering the market to get stopped out with a quick, sudden, basically a V-shaped recovery where we see a sudden drop and a quick reversal back up, adding on all these bullish value gaps on the way to the upside until we take buy side, pull it back, push it back up. And see where we're at right now. Where's price sitting at? 4,517. Touched entry, no entry entered. I'm not confident with my short, but it's a valid 22 model entry, I believe. By the way, what did ICT say regarding a trending Asia session? For what we are seeing, the volume imbalance is a good indication for price going in that direction. It's a good indication, but sometimes, yeah, even good indications fail. What did ICT say about a trending Asia session? Well, he didn't say anything about a trending Asia session. He only said about if we have a big Asia range. Most of the time, it's best to avoid London. I think when he answered the question, okay, when should I avoid London session? When we have a big Asia trend. But we still keep on bumping into that 50%. Even right here, we closed above, low volume, that's why it's okay. And we volume imbalance back below and open at the 50%. Now we get rejected again, open with another bearish volume imbalance after closing our last one in immediately. Would be a nerve-wracking trade to be in. DXY continuing lower. Like I said, I want to see the 2022 model happen within 3 to 5 a.m. I'm not going to take the 2 a.m. market structure shifts where we only chop and then eventually we break. Let it work out, so be it. I made that decision. Because from what I see from my trades that I took over the past 8 days or 9 days now, all of them failed. If we got the market structure shift before that, except for one. Most profitable session so far is the New York session. That's every time where we made back our losses most of the time. Let me check it out actually. Bento book. Counts, trade day. London. That was the only London win. London loss, London loss, London loss, London loss. Doesn't have to mean it's a losing trade today. Just don't like it. Let's see if we close above here. We're still playing with it. Don't want to scare you out to trade. Simply stick to it. The potential is always there. We wick back inside of the fair value gap. Boop. So ICT didn't say to trade the 2022 model for the Asia session he just put the model out there, and well, it's up to you. Like I said, you want to see higher time frame point of interest ideally to be taken out, like we did right here. Huge rejection wick to the upside, bearish fair value gap. Can be pretty sure that price has not much interest going back above this high. That should really be the protected high in this scenario. That's what he said. There are, on the 1 minute time frame, I'm sure there's a little 2022 setup here or something like that. Or right here. Maybe down here. Down here maybe as well, if it's not shooting up too quickly. But not the idea of the 2022 model, the market structure shift and the bullish fair value gap being left behind. But the higher probability ones, in my opinion. Of course, you can also just play these on the 1 minute time frame and see how it plays out. Ideally test it on a paper trading account first, but the good ones come once we reject from a higher time frame point of interest and we see a sudden move away from that, a nice snap away with a bearish fair value gap being left behind, nice sell side liquidity below. This is when we can really make sense out of the 2022 model in this scenario. And sometimes we do form the high of the day and high for the entire week during a London session. So there's nothing saying anything against the London 2022 setup. Let's take a look at that London win that we took right here. Entry at 4 AM. 1:30. Oh yeah, that took a while. So it was also, now we shifted structure with the London Open right here, and then we gapped up, retraced and continued higher after taking out the Asia sell side from the low of the day. Right now, still being in between. The possibility is there, like always, for the short. Midnight below us. Get rid of these longs. Take a look at NQ. And the DXY keeps going lower. Had a similar rally right after the open. Then started to now pull back. It's likely what we saw here on ES. That dropped to the downside and then slowly pulled back. Did it and also in an ideal scenario, we test the 50% of a fair value gap, and really there should be, for the 2022 setup, there should be no real reason to come back for the ideal setup. Why would it come back? It filled in all the inefficiencies after aggressively snapping away from a higher time frame point of interest. Immediately coming back to it. Not that textbook setup that we would be ideally looking for. Of course, we can't ask for it every day. But just from a logical point of view. The job is done inside that fair value gap. Where's the reason to come back into it? It's okay, yeah, sometimes we just chop, consolidate a little, but consolidating inside it after already rejecting from it. I mean, we saw a very nice rejection candle. Took out this high one more time, rejected. And this time we would anticipate really lower prices. Bearish volume imbalance, but we closed it in and closed right back where we started at the 50%. Consolidate below that, but no, weirdly, with bodies respecting the low of the fair value gap until it's over and we overshoot it. It's not done yet. The candle hasn't closed. And we could just keep on chopping here. Yep. Back to the consequent encouragement. Let's take a look at NQ. Hit it once again. Take a look at the DXY. It keeps selling off. I don't really want to be involved in this job. This would kind of be the entry here on YM, but I decided to not take Scalper Pro trades today, since I already missed the first one. It's just gonna skew up that entire probability thing. Yes. It's nice to see how perfectly we respect it. I mean, yes, we got above it, but wicks do the damage. Wicks hit the stops above here. Take a look at the 1 minute time frame, maybe for some more insights. Slowly move back up, hit the stops. Equal highs above again. Still respecting the low of the fair value gap. Now open up a bullish fair value gap. Bullish volume imbalance. It's okay, stick to it. Don't think about it, don't stress about it. Well, hard to call it. A 2022 model, really. Well, depends. 1, 2 a.m., take out the low of the day, snap away aggressively from it, hit the fair value gap, continue higher. Fair enough. It hit the stop loss. That's what happens during these chops. What's the DXY doing? Nice. Silver fair value gap, SVG strong fair value gap, silver bullet fair value gap. What's an SVG? Super value gap. Silver bullet, yeah. Fair enough, makes sense. It's also a very nice candle right here. If we look at it, we have wicks to the downside, and on the CFD charts, they open up the spread to make sure stops below these lows are hit. Open up the spread without having to spend money to push price even below the Asia low. And then we see that very, 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 very strong pin bar candle. That's all we need. Strong pin bar, inefficiency. Wait for that inefficiency to be traded back into. Yep. Target a bearish fair value gap at the high. Take partials. Quick 2-to-1. Pretty good. We're still playing. I guess then let's take a look at EU. Are you guys just following EU or actually trading it? Took out the previous day's low. Consolidated. And we actually, or did we leave behind perfect equal lows? Yeah. $230 pin bar. London open. Vroom. Take a look at the 5-minute. One push, two push, three pushes lower. So just based on that, we would expect the indices to continue higher. But right now, all we get is job. Like we mentioned, strong Asia trend. We want to see price moving away from this area before I engage with the tape reading, maybe, if I see something nice. But nothing there just yet. Stop loss, one tick below. 2-to-1. Yeah. Be optimistic. I would have put in a stop loss down here. But in whichever direction we end up going into, I think after this consolidation, gonna move away rather aggressively. Bullish volume imbalance above the 50%. Trading EU if I see a setup noise. EU is perfect every time. It's basically the same as a 2022 setup without the need of a market structure shift. You just basically need to have a strong bias, strong draw in liquidity, and then take every fair value gap in an uptrend and label it as silver bullet. Going for this high. We're not stopping here. The XY keeps on going lower. All the indices are still messing around. Well, Take a look at the 1 minute. No. Keep it simple. We're only half an hour in, really. That's why I started to kind of avoid that first 2 to 3 a.m. timing window. Only see what manipulation is going on at the London Open. And capitalize ideally based on that potential manipulation. Still 2 minutes to go. Still chopping around in here. Even if we close above, not really super keen on getting in this long right here. Don't like trading or anticipating the outcome of a consolidation, because it would be so easy to snap back down one more time. You can see the indices are already not following what the DXY is up to. I mean, just look at EU. But also we had that Asia trend, and EU still kept hovering down here, while the indices, relatively speaking, we saw that same downtrend. And while the EU kept playing down here, the indices already popped to the upside, almost back at the high of the day. While comparing that to EU, played down below the 50%. Got that nice pin bar at 240, bullish share value gap, quick 2 to 1. While the indices were already up around this area at the high of the day, or really close to it. Uh-oh. And we're getting the strong push. It's 335. That's the beginning of a new 15-minute candle. Let's check out that time frame again. Perfectly kept on holding on this 15-minute. So now we have a inversion fair value gap right here. Let's see what that would look like. For a quick scalp. Wouldn't give it more than 2.5 points stop. But I prefer saving my bullets for this London session. At least for now. We can paper trade it though. And see how that would go. 2.5 points, safety stop. So now we closed above our unfilled volume imbalance right here at that high. Take a look at NQ as well. Still rejecting of our 2022 fair value gap. If we see it now immediately reject the inversion, no reason to stay in this trade. volume imbalance right here, paired with the 50%. So we could really even say that once we close back below the 50%, to cut risk of this trade. That's how we can manage our risk actively without having to wait to be proven to be wrong and keep our losers small and our winners big. So we turn on that 50%. Exactly not what we would anticipate from a inversion fair value gap. That's why I decided to make the switch to paper. At least just yet. Ryan, if you had your stop above here, let's go. Did you? Nice. Yeah, we can also do a Euro stream once, but I don't know, I don't have not in the flow with Euro US dollar. We check up onto it every now and then, but it's always hindsight in the end of the day. And then it's like, oh yeah, it's doing so well. I'd like to see the back testing for that, or do it myself on the weekend. And sometimes we just have very good market periods, and sometimes not so good. Just gotta stick to one. 30 seconds to go. Let's see. Otherwise, we take the 2.5 point stop out. Already scaling out of one. 13 seconds to go. Can we close back inside the inversion? And we close right at the low. Still not what we would anticipate. So we just keep on chopping, or we finally head south now, like we do right here on NQ. Take a look at EU. Those are the market maker traps. It's exactly what you would expect from if you watch that video. First push up, perfect pin. I mean, look at that peak formation. We go up, make it look like it's gonna go long, immediately come back. Okay, not enough yet. Guys, we gotta trap more longs into the market, otherwise we're not gonna make enough money. Push it up one more time. Reject, 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 reject. And at this point in time, just looking at the 15 right here, pin bars, immediately reject every time, wicks to the upside. Going in short right here, stop above your high, that's that triple top or M pattern to the upside. Well, not really a nice M, but we get the idea how they make it look and basically make it irresistible for maybe some more unexperienced traders to enter into a long. Once, twice, not really having to overshoot this high anymore, because that's all they target. It's enough if they hop in long and then quickly snatch it away. And then we get the expansion lower. $40 pips. And we pushed back up. But at this point in time, I would have hit break even, yeah. So that would have been a break even trade. We keep on holding. That's why I didn't close the second contract. Trying to actively manage the risk. They are playing. They are playing with traders today. Like, oh no, it's going long now. Oh no, okay, I was wrong. The short, my initial short was right. Jump in short again. Ah. And reject again. Screw that. Let's wait for 4 a.m. before something nice might be happening. That's also a new 15-minute candle. Let's check out that time frame. Yuck. Yeah, I cut risk. I took off one of the 2 contracts. Even in Q here. I mean, entering right here, you would have never seen much drawdown with your stop above here. 10 points to make 20. It's fair enough. Yeah, understanding that. I will study more of these market maker things. Really try to apply it on the chart. Nice pin bar, move away from it. Fair value gap entry, target highs for a quick scalp. That's London session, London open. 30 pips. Make it look like it's gonna go long one more time. Ignore the bullish fair value gap, leave behind new bearish inefficiencies. Target sell side from here, 40 pips. Low hanging fruit sell side. We can't always go for the extreme lows. Just want to make sure we get paid. And then we can always say, rest is going to get stopped out at break even. But I think I would prefer sticking to a 15-minute time frame if I trade EU, just to keep it simple. Even be able to, not having to sit in front of the computer, just checking the phone, trying to get a feel for what market makers are up to. But right now I don't feel the need to trade anything except ES. Would be the wrong time to make the switch. Yeah, basically. That one is a 2022 model on EU. Let's check that out. 5 minute, I guess. One minute? No. Okay, you mean the one that I looked at, yeah. That would have been. Because we move away drastically after taking external, and then we can also understand the market maker template. Trap breakout traders long, retail longs, maybe some fair value gap longs. Off the fair value gap, snatch below that. Offer new bearish inefficiencies, and we play that understanding that one side of the market is trapped above a certain level, shouldn't really come back into this area to move it away drastically from them. That's the way you can play the game. Alright, we can make a Q&A or question session for this. Like really, there's not much going on here on ES. Win this paper trade. But so far the London session hasn't been really not even 5 points. I mean, if we compare that to yesterday, where we saw it, I mean, yes, we took the 2022 model short, but we understood why we've been stopped out. That's the cool part about it. Like right here, London opens up, bullish momentum, we get filled on our bearish fair value gap once again from that market structure shift at 2 a.m., which basically, in hindsight, also was just a fake out, and afterwards we consolidated, leaving behind new inefficiencies. And same way as we could have done today, inversion fair value gap right here, use that as support to continue up higher. I think we even played that yesterday. Boom, 2.5 point stop down here at the VWAP, target 5 points. And if we see invalidation, close back below the 50%, take partials, exit. I think taking the entry long down here would have been too risky for my liking. I mean, yeah, same approach again. We had the midnight level right there. We enter on that midnight level, use our 2.5 point stop. So if we're wrong, we're just wrong, lose barely anything. Target 5 points for a nice 2-to-1. If we're wrong, we see it close below. We can take off some risk or exit the position completely, manage it actively. And only in the case where we say like, no, we've been completely wrong, we hit our maximum stop out of 2.5 points. But here at least we moved. Easier to tell what market makers are up to compared to right now, like it's next to impossible. So we close back below the 50%, but we open up with a new volume imbalance right at the 50%. It's when I like to give it a second chance. And I mean, we're still perfectly holding the low of this inversion fair value gap. Yeah, we wick lower. Might be the time where it fails now. But we've already cut our risk in half. I'm really hoping the best for Ryan for this to work out. We took the low. So we want to see one nice close back below it. How on earth am I ever going with days like this? By trading a big capital, so with one good trade you can be done for the month, potentially avoiding session like this. Yep, trading is a calculated bet. There's nothing guaranteed. It's your income being a full-time trader won't be linear. Gonna have a specifically good month, a average month, a month where you even end up in red. But the important thing is that just because you're in red, you don't end up blowing it up because you try to force it in profit. Now, trading big capital doesn't mean bet 10% on a trade. You most of the time bet less risk, same bet. I have to forex our business in South Africa. If you look at Eurosar, what do you think based on the M&R sell side liquidity? Let's take a look. Eurosar. The market, Ryan, one last thing, it's the only thing that you can control is you being consistent and sticking to your rules. What the market does in the end of the day, it's up to the market. You can only control so much. Euros, let's take a look at Wanda, I guess. Haha. 3 peaks, CPI. Tip. Once you see that wick here to the upside, even just jumping in with the market right here, coming from a overall high, trapping longs, bullish ones, we see that same pattern, that A formation or upside down V, bullish fair value gap, take the highs out one more time, ignore that, but before CPI risky. But right now, buy side, sell side first. Let me look at the daily first. So understanding that we just took one of the, or maybe the all-time high right here. We'd use that as general resistance area. And now kind of looking like we're forming a bull flag. We're inside this weekly order book. We have perfect equal lows on the weekly down here and more sell side down there. And the low for the previous month low, 30th of October, right here. From a gut feeling, I'd say sell side. Eventually we're gonna run out these highs. But after this pretty strong move to the upside, all the way, like, yeah, starting basically April 2022. It's similar to the DXY. If we look at the DXY, remember that where we went away from the all-time high and had this strong push to the upside? That looks very similar to what I see on the DXY. If you know what I mean. If I quickly jump over here to the DXY. Similar, like just from that narrative, we have that strong run up and push down. Weekly, bearish. Expect support from this bullish fair value gap initially until it breaks. We close below it, didn't really respect it, but now we keep hitting a wall here. 50% would be coming in at 18.5 roughly. Take a look at the monthly. Monthly bullish fair value gap down here as well. That would be our bullish breaker block. Just roughly this area. Old resistance turned into support. We already took out the previous month's low and August lows. So the question is, are we going to take July lows? Daily. Rejected off the daily bearish right here. Pin bar candle to the downside. And like every time here, really trying to make it look like we're gonna go long again. We immediately snap away with those big bearish candles. So I'd say sell side from a gut feeling first before we take any more of these highs. Those are more the traps they're setting for the longs to pay for the short-term shorts before we hit these perfect equal lows and the set of perfect equal lows with a monthly fair value gap below. Someone played with the music, but at the 19, pretty much what you said, and then reverse. Yeah, euros are dump it. But that's when you really get the narrative what's in play, and then you can still get confused from a lower time frame and end up in analysis paralysis. Oh, what happened now? The bot completely disappeared. Especially since you're saying you're managing Forex for our business in South Africa. You're not really, I guess, I would assume that you're not trying to short-term hedge anything. I think you would do that rather over the long run. So not looking at 5 minute, 15 minute. Okay, let's buy some euro now and sell some SAR. Other way around. With forward cover, yeah, so hedging. Play. By the way, bias is a difficult concept for me, at least, because if you have a bias on weekly or even daily, but you trade on 5 minute, it's not that useful, I think. Even if bias is right, yeah, I'd say, will it work? Don't hear it. No, anyway, let's leave it off then. So we got stopped out. We're still playing around here on the paper trading account. Make it look like maybe going long one more time. Ryan, best of luck. Let's go. Where we add from our entry at the opening. Stop loss at 4519.25. Or at the high, we've spared that one. But now after a very long time, we closed below our old bearish share value gap and then assumingly bullish share value gap for the first time, and also nicely far away from it. And Q also kept respecting our bearish share value gap. YM rejected. Let it run. Resume to player. Play. Is anyone hearing it? I don't. Well, I will see. What I wanted to say about the question right here, higher time frame bias. I think it's more sort of something that you can use on the lower time frame. Let's say your overall monthly bias is bearish or weekly bias. So what would that lead you to think in terms of a weekly template? To very likely get your high of the week Tuesday, Wednesday, Thursday, around the mid of the week, and then we continue lower for the rest of the week. That would just tell you that, well, looking for longs Monday, Tuesday to get into the high of the week or into your week, into that objective where you think we could reject on the weekly or daily time frame. And let's say we're already at this area where you would anticipate or expect something to happen a correction back to the downside, then you can, yeah, not take that long signal, because based on your bias, that wouldn't really make sense. Of course, sometimes it still plays, but that's just how you would integrate that. And if you get your short signal at that area at midweek on Wednesday, high of the day, in there, like we saw, for example, last week. Let me go back into that. I just remembered that. Didn't end up happening to be the high for the entire week, because based on what we got here on NFP Friday. Was this NFP Friday? I don't know. Yeah, maybe just a regular Friday then. But right here, let's say overall you expect that price to reject a little, to retrace into maybe our daily bullish fair value gap right here, because we've just been going up after the massive week we had here on ES. Consolidate a little bit, and yeah, the area where, I mean, we did it here on the stream too. Bearish fair value gap, owed 50% of our little pullback right at this area. Okay, daily volume imbalance. Overall, could keep on going with adding stuff. Old support area turning into resistance, also perfectly lining up with this bearish fair value gap that we have here on the daily. If we would just extend that further out to the left, has it been respected? Yeah, kind of. Can see that pretty nicely, even if we continue further and use it as a, that's a key area. And that's just what we use to get an idea from. Let's go back to this one. And then we go down onto our lower time frames. We see, okay, we're at the high of the week. We've only been going up today. We have Asia and London sell side below us. And then it just happens that we sweep buy side one last time above a higher time frame point of interest, and 930 opens up and immediately continues to the downside, giving us our 5 and even higher time frame market structure shift, because we also even close below the major swing low, leaving behind a nice inefficiency, and we continue lower from there. We kept on respecting that area once again here during the AM/PM session, where we saw a similar setup. So taking a long up into this without really seeing your weekly target hit, which would be the bullish fair value gap right here, coming in at below, I think, Monday's low. So looking at it from the on the lower time frame, what would have we liked to seen? Monday's low is right here. That's where our daily bullish fair value gap comes in. We have Monday's low. We could snap Tuesday's longs and Wednesday's longs at the same time, after already seeing a likely move towards that, but failing to continue lower. Now at the high of the week, weekly template, bearish fair value gap, that could give you the confidence to hold on to the trade, and especially once you see, okay, it's really moving into my direction, to negate shorts and add on every bearish fair value gap. Here we even got a nice little fractal 2022 model inside the bigger picture 2022 setup. Even if we go to the 15 market structure shift at the high of the week, if we would go to the 1 hour time frame, what would we see there? Where are we at? That's the bearish week, that's the up week. Market structure shift, retraced, volume imbalance, continuation lower. Hitting all these targets. What we do afterwards, yeah, market maker. We see that W formation again without really having to hit this lower low, but we see the rejection wick here, displacement back up, hourly bullish fair value gap. Sure, let's punish all these shorts, also higher time frame shorts that are still in, that thought finally the top is in and we're gonna retrace into last week. Nope. Make these shorts pay for the long and trap. Hope that makes sense. If anyone has questions about that. Does that make sense, Omar? That's how you can use the higher time frame idea even for the lower time frame. It might not be the easiest thing to do, because holding on to a trade for a very long time, it's like that and not the high of the week, and to hold to the low of the week, that definitely needs some skills. But eventually you get there, or you at least understand it, and you can scalp your way further to the downside. Oh, this is gold. Now we're back above. Take a look at NQ. Oh, yeah. Ouch, ouch, ouch. So, new hourly candle. At what time did this down closing candle happen? Okay, 4 a.m. Looking at the hourly time frame, 4 a.m. Try to trap in shorts again one more time. 15 minutes, still holding our bullish value gap. 5 minutes as well. Immediately engulf with the next 4 or 5 candle right here. Now it's 4:10. Next candle is going to be start a new 15-minute cycle after 1 hour of consolidation. A new entry long on YM after 1 win, 1 break even. Same story. 2-to-1 risk reward. Let's see how that plays out. If that plays out. We also have SMT divergence because we made a lower low here on NQ and a higher low here on ES. Ideally, we would prefer to trade NQ then, because NQ took the sell side. There's no reason to come back really into this area. We traced also deeper. Perfect equal lows. Well, what I'd say, we've seen exactly that before. That might be the time where it fails and we finally get to the buy side. But nothing really cool. I think you said something about DXY. You possibly a stop run with SMT divergence to DXY on 15 minute. Let's check out that. Bullish volume imbalance. Let's paper trade that. $18.50, 2.5 point would be 16. And the take profit target, 5 points. Entry, aggressive entry on the volume imbalance. Really not interested in seeing it coming back to the inversion fair value gap again. I think we should be done in this area. I mean, look at it. Might be new hourly momentum. Maybe we can hold some support right here and finally lift off. No time right now to look at the Euro US dollar SMT. We tried that before, but it just wasn't the right time. 4 a.m. was. We use this volume imbalance as our aggressive entry, understanding that we don't really have to come back into this area. That volume is trapped to the downside. If we come back, we would give all these that maybe got in around the 14, 16 levels a chance to get out at break even, like we've gave them right here. Take our first pause at the high of the day. See if we get filled. Trail our stop loss. Yep, we took that buy side. Leaving behind new bullish inefficiencies. Okay, NQ also took the high, but didn't run the high of the day just yet. That high would be all the way up here. No divergence anymore. I'm out. The torture is over. Yeah, I feel you. I feel you. But that's what it is sometimes. See if we can keep up pushing into our 5-point target here. What do we have right here? We have nice inefficiencies. Retest Tuesday's low here maybe. 15-minute. Also a bullish volume imbalance on the 15. Remember when I said that's starting a new 15-minute cycle, and we open that 15-minute cycle with a new volume imbalance. So I had more confidence entering on that, understanding that we move away aggressively from this area, not trying to give traders that are still in short maybe an opportunity to get out at break even, especially once we see that volume imbalance. That would confirm the entire idea for me. Let's see how this candle closes. Ideally, I would like to see a close above that area. We hit this old high. Now we have equal highs right there for our 5-point target to be hit. That might be a little bit ambitious, but just measuring this entire consolidation here from the low to the high and projecting some standard deviations. One standard deviation would perfectly hit these equal highs now here. 2 standard deviations, 3 standard deviations, 4 standard deviations. We'd be back at yesterday's 8:30 opening level. 3.5 deliver us into here. We'll see. At least that's what I would anticipate after that long consolidation to get the relief. Or maybe the fake out. Take a look at NQ. Okay, so we took that equal high buy side. Second candle of the new 15-minute cycle. So let's see what's happening on that last candle. Now on that second candle, the middle candle. If we close above these highs, I'm gonna trail my stop to break even. I might even do that now. Took one partial here. Could have really also taken a partial here, but didn't really offer the best risk to reward ratio. We just risked 2.5 points here with 2 contracts, and if we would have seen the volume imbalance being closed back in and we're getting back to this area, well, likely would have cancelled the entire position. YM is running with us. Getting pretty good results on the scalper strategy lately again. That's nice to see. NQ didn't take the high just yet, but I think that's what it's going to do. That would be a new market structure shift right here, whichever high you want to use really. Now we could use this as potential support, inversion fair value gap, to hold support to deliver into these highs, or fail, of course. It's always a possibility. Can go to the 1-minute time frame maybe now. But even here, regarding fair value gap entries, you wouldn't have had the easiest time so far. That's why we have risk management, or that's why we have to make sure we use proper risk management. All we can do, if we really stick to rules, is to make sure we stick to them. Don't worry too much about our PL going up and down, in the short term at least. That's just driving you nuts. Save yourself that trouble. And look at the bigger picture. Don't let that affect any of your mood going into the day. It's just a trade. I know it's affecting me too sometimes with that trade day challenge. We get back to, we started with initial drawdown right here. Let me go to the bento book and pop open the calendar. Right here, we started with some decent drawdown, 3 losses in a row. And you're like, oh, damn it. I just started the challenge and starting terribly. And then on Wednesday, like everyone around you is asking, why are you so happy? Well, because you finally won. Yeah, cool. And then, alright, not the best day, so maybe some mood swings because we lost during London and won during New York. And then Friday, fuck the weekend, we lost. Screw that. We only made barely any profit. Can't really focus on that. Even here this week, those 2 losses were 2 mistakes that shouldn't have been realized. The unicorn setup and the 2022 setup post 5 a.m. Guess what my Monday was like? But it's not worth it. It's really not worth it. On Tuesday, we didn't get an entry. On Wednesday, we took a London loss and a New York win. A little bit mixed feelings about that. On Thursday, didn't want to enter on that short. Consolidation just below the high. Of course, it was possible to get a deeper retracement, but without me. I'm going to put the stop loss at the 50% here and see if we can scale into this position at some buy limits at the old high, overlapping with a bullish value gap. Only if we see the invalidation of that and would be forming that A shape. I mean this. So we push up, trap longs one last time into a long, and then snap back. We could be able to tell that this is likely a scenario if we happen to just disregard even our highest fair value gaps. Because then we understand we have SMT divergence between the two. And we likely just trap traders long one last time, liquidating all the shorts above the high of the day, hit a 5-minute bearish fair value gap to continue lower, and finally take that sell side. The manipulation never ends. But until we don't see these signs, I think the long is still in play. We'll see. Let's check out Discord. Oh, sorry, I'm washing my keyboard. If the 15-minute candle is closing like that, it looks good for a short on EU. Take a look at that. Took buy side. Yeah, for a retracement, definitely, depending on how bullish we are. 5-minute time frame. One-minute time frame. Be kind of hard to tell. No nice 2022 setup yet. We would have to close below these lows. Unless you want to anticipate the short into these equal lows and maybe these equal lows as a little retracement after this bullish run. Check out what the DXY is up to. Pushing back up after hitting the low of the day. Swap that. Let's see how ES is playing. Get rid of these arrows. That's really making it messier than it has to be. One minute time frame. What's it looking like? Still respecting, but wait for this candle to close. And Q. Let's see if that inversion now holds up to target these relative equal highs on the buy side. I'd say that would be a pretty good play here. Maybe the 50%. Stop loss would be rather big. Maybe you could place it down here, 10 points, to make 15 if you like that risk to reward. I think you won't get a better, well, still kind of risky stop loss, but you could manage your risk well if we see it close back below the inversion. That's overlapping nicely with a new bullish fair value gap. Then we could say like, okay, let's take off 50% or the first 25% of the trade of your entire risk. Seeing that first invalidation, and then by the time we would see the second one, could really call it. And use the stop loss as a safety stop loss. So we close below all that. Open with a bearish volume imbalance. But in this case, we would prefer shorting ES. Close below that. We already stopped out on our safety stop loss. And here we see that last juicy trap long. We tried to add on the trap. But we can already see that we close below the volume imbalance. Bullish fair value gap. This old support level. So the last level of defense really is this bullish fair value gap right here that stops us from catching these lows. From the high of the day, maybe back to the low of the day. If we get a 2022 setup here, I'd be taking that. Because that's now inside the London session. 5 AM is right here. DXY now likely giving the retracement. After taking out that sell side. YM as well. Check out the 1 minute time frame. And that's that pump and dump A shape formation that we spoke about before we saw the real confirmation for it. You would trust your gut feeling on these entries. Be like, okay, we took all these highs out, we trapped more longs into the market. I jump in with market makers right here maybe. Of course, you're still in danger that we bounce off this fair value gap, but really there is no 100% confidence opportunity here. It could always happen. For you to get stopped out, you can always find reasons why it's not going to work, but it's better off sticking with one other than hesitating and being too slow. I like to wait for more confirmation. I'm not super confident on these market maker things yet. I can see them, I can anticipate them, but entering on them, not yet, not quite there yet. But we understand what's happening right now. That A-shaped formation taking out or targeting these lows. Or just getting rid of the longs right here. That try to, like me on that paper account, jump in on these volume imbalances here, add to the size. Let's check out our account history. So on that long today, 16th, 87, 125. Overall, little bits of drawdown. Oh yeah, this was the first long where we got stopped out for 2.5 points. And then we took the long of this volume imbalance, hit our targets, tried to add for the continuation higher, but ended up getting trapped. Then we would consider this entire up move as our last manipulation move, in case we're right about that market maker thing here. Only measuring this new 4 a.m. manipulation to the upside. One standard deviation and we would hit the Asia session low. So if we would use a little box tool, so the range that we moved to the upside right here, it's pretty much the same range that we would have to move lower to hit the Asia session low, just to put it into perspective that, oh, we're up so high we can't get down there. No, don't really have to move much to get down there. Or maybe even lower. Let's see where we close on this 5-minute candle. Check out what the 15-minute is looking like. Nice rejection wick. Now to the upside. Bearish volume imbalance. Let's see, I might have been a little bit too slow. Getting back on at the 50% here. If we retrace higher, I would add one more contract right here for a second position. And do it like this. Buy one stop. Okay, we filled with one. For the trade day challenge, I would have to wait for the confirmed market structure shift down here. I anticipate that now on my funded account. See how it goes. Already anticipate the loss. Okay, so now we're filled on both. We have our 2.5 point stops. Ideally, I would like to see it reject from that and not hold support here. Otherwise, I would already start cutting risk. Inversion fair value gap. Inversion fair value gap. Overlapping with a bearish fair value gap, but already not liking how we're pushing back from this area after the volume imbalance below the 50%. Let's see. Only risking a 0.25% here on this trade. NQ respecting that lowest fair value gap. So from our 10-point stop, still looking okay. Let's see, 2.5 point stop. Average entry, yep, looking fine. Rebalance this bearish candle. Let's make this a FVG gray box because we've used it so many times. And if we're wrong, the scenario would be pump up, trying to get traders long, stop out shorts of course, and then shake off all these late longs that entered up here, and that can't really stomach these 3 candles down. Or get scared, emotional, fear, before continuing the actual move up. We'll see. So the invalidation for the first contract that I'm going to close would be already closing in this volume imbalance. Gonna wait for a little bit more time to see that. We still have that bearish fair value gap in here with these odd volume imbalances to potentially use as resistance, unless we got screwed over completely. My highest stop loss is right here at 4,520, which is only going to be hit in case we are completely wrong about the manipulation and this potential A formation. With the bearish SMT divergence, that also would be part of the confluence for me. We have our exit plan, we have our target plan. Really, for me, that first target would be the midnight level. Nice, we leave that volume imbalance open. Midnight level from the highest entry up here, that's 5 points, that's perfect. And from the lowest entry at the volume imbalance, I would target really, regarding the manipulation, if we're right about that, the Asia session low all the way down here. Managing our risk actively. Now if there's actually something at stake, my funded account. Let's see if I'm going to the gym with a good mood or with a bad mood. Just kidding. It's important to keep that smile on your face. Otherwise, if you, I don't know, struggle every time you enter into a trade, then, well, I think you might have chosen the wrong profession. Because we only make money by taking risks. If you don't like risks and you sweat every time, then might not be the best thing. Alright, so I like this rejection. Let's see what we do around this volume imbalance and our old, I don't know what we want to call it, our old inefficiency, consolidation efficiency. Like I said, if we're wrong about, right about all this, this is our manipulation to trap traders long. Our market structure shift would come in right here. But I also at this point in time wouldn't expect price to snap back up again in our highest bearish value gap. Maybe we could only use the breaker block on the trade day account. It's 440, so after this 5-minute candle we get a new 15, and the 15-minute candle is looking pretty nice with this pin bar rejection. Continuation lower. We have our 15-minute fair value gap right here at 15.5. And we just keep on going with that logic to expect perfect price delivery after all this manipulation and consolidation. If we don't see that, we cut risk. I'd love to have the music bot going. Where's that funnel? Join. For some relaxed tunes. Yeah, join the live streams. Play. Just some tag words. Let's see what comes up. Anyone hearing the bot? It's not really playing, or does it? And for some reason it's disappearing every time it's joining. Well, we had some music. Unfortunate. Gotta turn on some music in the background. Headphones are empty anyway. So we tested the volume imbalance and rejected from it. If we take these lows, I'm gonna start trading my stop loss here. Like I said, they are meant to be safety stops in case we're completely wrong and we just snap back up. Like I said, I'm still actively managing my risk. Once I see stuff that I wouldn't like to see after closing below this, nicely rejecting from all our inversion fair value gaps, respecting that to the tick. Close back above. Wouldn't really be interested in that. I'd prefer to sit out. NQ failed to hold the inversion. To take the buy side. The DXY is continuing higher, which could help EU shorts that Volker was looking at. And my potential shorts right here. Should I take a low-hanging fruit target down here? And let the rest sit? No, I think we should be fine. Taking profits early. Some people say taking profits early. I mean, sometimes it's hard to not. But it's better to cut your risk at break even, to keep your losing trades small. But I think what's really the key long term is trying to keep your winners big. And by cutting risk early, you never achieve that. You're always scared, and you most of the time end up with losing trades as big as your winning trades on average. That's not really what we're here to do. We want to give the entries we take a chance to even hit this target to the downside. We minimize our risk so that we at least not lose, but trying to give the good trades an opportunity, where we'll see if it's a good trade, an opportunity to play out. We already have that A formation now. We're almost back at the low, respecting inefficiencies and all that stuff pretty nicely so far. And we're in our trade now anyway. For the fund account. Let me get rid of the drawing spot. There's still the possibility that we're completely wrong about this, that we're gonna bounce off these lows one more time. We sort of have some bits of a trend line here, paired with the VWAP, paired with the new day opening gap. We just started a new 15-minute cycle and a 15-minute candle now for the first time today, close below our 15-minute bullish, and we already retested that. Close below. We want to see rejection, take out at least these lows. Then we can start to trade our safety stops with us. Just following price here. So we can actually see that this 5-minute fair value gap perfectly lines up with our 15-minute. So let's make this a... What color should we make that? No, not breaker block. Let's make this a regular fair value gap as well and label it as a 15-minute inversion fair value gap. So we don't just have empty boxes here. Can get rid of this one because we haven't really seen it being respected. We use this one from a higher time frame. Already delivered the inefficiency nicely, understanding theoretically that if we would go back up into the high, we would give these longs an opportunity to get out at break even. Let's say on average 4519 is that entry price. If the market makers want to make money hitting the stop zone here, well, they would make more money by not giving them the opportunity to get out again, and we see that pump dump formation. Just trying to apply these new things we picked up. What's the time? It's 45. Unless we do that chop like yesterday where an hourly candle goes down, next hourly candle goes up, hourly candle goes down, up. If we remember that. So I'm going to trail. Am I still drawing now? My highest stop to this high. Maybe both stops. Now we'll see. Any questions, guys? No, I don't think I have a reason to take profits early yet. It depends on how much you lose on average, I'd say. If your winning trades are always the same size, then you're losing trades. Like yesterday during the New York session where we cut the trade early at the what sell side liquidity, I think just the low of the day. Yeah, well, saved us from getting stopped out in the end of the day because we completely reversed. And I took profits early there because my average risk is usually $250 or my average loss. And we've been 550 in profit. So more than my usual profit. That's fine. I don't need to hold for the best case scenario. And yesterday, during that job, we understood that after a big CPI move. All right, let's see. Getting a pushback up. Take a look at NQ and the DXY. Be surprised if we wouldn't take the lows, but so be it. We already lowered our risk. Break even wouldn't make too much sense to me right now. 15-minute time frame could retrace a little. We're open for that possibility, but if we would engulf this 15-minute bearish candle, that's where we would take our stop out for 1 point. So we decreased our risk already significantly. If we check out the 1-minute time frame, see these inefficiencies we have sitting around here? We could be hitting that one more time again. Unless, of course, we want to leave the London lows intact. Like yesterday, we also saw that pump up. And then we reversed, but we never took out the lows, if you remember that from yesterday. London session. We had that pump up. Bigger pump up, really. But we came back without ever hitting our lows right here. Just leaving behind equal lows and then moving up, up, up until PPI news, where we took the short and took our profits, I think, right here. 930 short. Yeah. I think we're trying just managing our risk the way we always do, or the way I always do. Bearish volume imbalance here. Still rejecting off here. That's 450 candle. 445, 450. Check out that 15-minute again. Yep. DXY rejecting of the inversion, that's what we would expect, anticipating these equal lows to be hit with bearish SMT divergence at all these highs. Right here. Right here. Ease, Omar, any questions? Let's see and wait how this 5-minute candle is going to close. So a 1-point stop out right here. Let's wait for that candle to close. Maybe it's just trying to trigger a few support and resistance traders to hop in on the long. Now with equal lows. YM. This one failed. Did it hit 1.5? Nope. So this would have been a loss up 1 hour today here on the Scalper Pro. DXY. 15 minute, 1 hour time frame. That's the only thing I could see against us right now. It's 55, so we get a new hourly candle. Let's see if that new hourly candle delivers the push lower. And that's outside of the kill zone, so I might take... I mean, our highest entry was right here on this inversion fair value gap, am I right? Yeah, 4517. That's 3.5 points. Just to this low. And 5 points. I'm gonna leave it at the midnight level. Knowing that we really don't have much business going on up here with the bearish, with the SMT divergence that we put in. Right here. So now we're right at the VWAP, seemingly breaking the trend line. So let's see, new hourly candle, end of the London kill zone. What's the hourly looking like right now? Still have that bullish value gap here. Hourly low. Still contemplating if that might be a good partial point. Yeah, we'll see. step by step. We just hit the VWAP once again. If you think the VWAP's not interesting, I mean, don't put it on your chart, but I like to have a baseline. And we see it's not just a random line. Been respecting it over and over. Because I got a YouTube comment saying that, oh, you've got a VWAP inside your ICT indicator. I don't think ICT would use a VWAP. Well, I don't care what ICT is using. Let him prove himself first. In the Robbins Cup. Last time he tried, he failed. And every time he has been in a... I mean, he faked his empty MetaTrader payouts. He forgot to put the minus in front of that, so Photoshop that. And I don't trust people who've done this once. Well, Omar, you watched the video I sent you. Yeah. It's there, right in front of you. It's like, imagine trusting your ex-girlfriend again after she cheated multiple times on you. Like, what would you tell that person? Is it the smartest thing to do? No, she changed, blah, blah, blah. Of course, people can change, I guess. But I'd say the maturity doesn't change. Just not the way it works, in my mind. So, yeah. Trusting someone that failed basically every time he tried. Always making a big hype out of it. And then saying like, oh yeah, I just wanted to prove to you that losing an account is really not the worst thing. Blah, blah, blah. Stick to your rules, okay? Watch my videos. I still think ICT concepts work, and I get really close to how the algorithm is being booked. But no, I'm open for getting the shitstorm. I don't care. Just watch the Iman trading video and then try to look at it from a neutral perspective. Yeah. Or that he got kidnapped and then blah 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 revealed the secrets of the market, and then they're gonna let him open a YouTube channel with close to 1 million subscribers. Yeah, sure. Sure. Yeah, as long the concepts get me fun and they pay me. I don't care really. I just want people to be more open-minded about things, because some people are really so deep into that ICT cult. It's really like ICT. It's like they're Jesus for some people. Like if you say something against that, there's a big community going to hate against you, that's for sure. Let's go back to our trade. We consolidate right here at the low. Not ideal. We wanted to see that to be broken. I'm gonna take a 1-point stop, which is 50 bucks. If we hit this level, already reduced our risk from initially $250 to something like $100. Would still actively manage the risk for the second contract. Take a look at the hourly time frame, open up with a bullish volume imbalance here, so we could just be chopping here on the bigger picture, not doing much once again. We have a 15-minute bearish fair value gap overlapping here now. Take a look at NQ. DXY, 15-minute. YM, also consolidating here now. No reason to be in fear or anything. You could even, as a little trick, if you already trade on TradingView, go to trading and put your money in percentage or ticks. And you don't constantly see, oh, $100, $100, I could take home $100, but well, think about it. If you lose the next trade, you're in drawdown again. Because your average loss being, let's say, 2.5 point stop with one contract is $125. If you only take home 100 on this one, well, digging the hole for yourself, basically. Of course, we can hold support on this area and continue higher from some sort of a head and shoulders pattern that's overlapping with our 15-minute inversion. I think our stop up here should be fine. That's also the 15-minute high right here. Only if we overshoot that with a wick, we would see that happening. Let's just be patient. Already 23 invites. Let's see if we can compete. If we win, guys, I'm gonna give that challenge away. I won't keep that for myself because I really didn't do much for it. Let's see. Let's push that. Let's compete with the community if we already have one. No, that's not the correct link. Where's the trade day? Trade day, invite people, copy. Alright guys, let's go. Go, 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 go. See what we can do. Nice. So we took out the first low right here and we rejected. Still playing around here. But if you remember when we looked at EU, where we saw that last manipulation up, we also consolidated it for a little bit before we really broke to the downside. So bearish volume imbalance, no reason for us to be worried about anything. Already reduced the risk. Well, practice your gut feeling and become more confident in it so you don't hesitate. Manage your risk. Well, that's the only thing that you really have to be careful about if you trust your gut feeling. And if you're wrong, also accept that you're wrong and don't put your stop higher or even higher just to not be wrong. Because you're then not trusting a model or anything that you could blame the loss on, like, oh yeah, the model didn't work. In that scenario, your gut feeling is wrong, and we don't really like to be wrong. Yeah. Well, let me look at EU. The first 15-minute candle. Right here, this one, or the 430 candle. Well, risk management is pretty cool. We could have said, okay, from our daily range, really starting from Asia low to the new high of the day, we could look for the 50%, then move it backwards. Low hanging fruit targets. We get our entry right here with a 15-minute volume imbalance. So let's say our first target really is that 50% for 20 pips. For a decent risk to reward, give it 8 pips stop. Or if you're confident, that would be a 10 pips stop. Give it a little bit of room to breathe. You should be fine for a quick 20 pips for your first partial. And then you can trail your stop loss to the high once it's confirmed and manage the risk actively. If you want to sell that top, get on that first 15 minute. And yeah, initially you can have your stop here. Add one contract on that volume imbalance. See if we reject off the 50% here. Make sense out of it, at least for yourself, because you're trusting yourself really here. Maybe put it one tick above. So 11 points right here. Now you're filled in the short. You can see next rejection. You can add a position here, or maybe use the lower time frame to add, or you already add your entire, let's say, 2 contracts right here, depending on your risk management, and have a little bit of a wider stop to give it some room to breathe, basically a 1-to-1. And then you can drastically reduce that. So let's say we get this pin bar to the downside like we did, trail our stop. But this is a best case scenario example. You would have to see how that goes. I mean, over here it would have worked too. If your gut feeling would have said, okay, first 15-minute candle down, we filled that entire fair value gap. I'm going to put my stop. So I'm going to use a 20-point stop. My ideal target would be all the way down here. But I'm going to take some risk off eventually after 20 points. and then trail my stop, drastically reduce my risk down to half the risk, 10 points. We move away, then you could always already move your stop basically to this high and be at break even, let it ride, and bank profits. It's all about risk management. Like here, that shitty consolidation, even though EU is continuing lower. So the next candle is going to be a new 15-minute candle. Let's see if we reject with that. Back at break even. So now we took these equal highs right here inside the 15-minute bearish. I wouldn't really want to see it go all the way back up into here. $50 loss, $100 loss. Yeah, I would accept that. Last stop would come in right here. Like I said, it's at our 15-minute high. Like if you want to short this, get in right here. Manage your risk. A 15-minute bearish. Middle line. If I see the close above here, even on the 5-minute time frame, I cut that. Seeing that we took out the 4 a.m. low, we took out a hourly low, not the 3 a.m. low, but the 4 a.m. low, and we move away bullish from that. We try to trap traders short, and now we make them pay for the move back up eventually. Let me turn on the money. I think I can manage it better if I actually see the money amount. So the 15-minute candle closed inside. Took some sell side. Didn't shift structure on the 15. I'd say it was worth the risk, that's for sure. Personally, for my mental notes. We hit the 50%. We closed above this volume imbalance. Let's make this red actually. Nicely hit that 50% level. Took these equal highs right there. We want to see that being a sweep, trapped longs, continue lower. Not really continue higher too much after hitting the 50% of the 15-minute. Now, of course, that's totally up to you, how you manage that risk, and based on your gut feeling, I just looked for a example where I could use it again to explain it. Hit the 5-minute bullish value gap, maybe enough of a retracement. 1 hour, 5 minute, 1 minute. Check out what the DXY is up to. Pushed higher, retraced a little bit on the 5-minute time frame, but still overall direction. Looking bullish at least. Of course, yeah, that's the pullback. But pullbacks usually happen without a consolidation, because only then it's a trap, like here, like right there. without the consolidation or the long consolidation, like right here. What's the time? 5:15. Now a bullish fair value gap down here, like I said. 1 point stop for me is up here, and the other one I'm gonna manage actively. I'm going to go to the bathroom real quick. I will be back in a couple of minutes. Just got stopped on the first one. So they just laid another trap. Not really moving clean. And I think that's gonna end it for today. Gonna cut the trade right here. Not really interested in anymore with that strong push. Because that whole narrative basically doesn't make sense anymore, because these longs can get out of the market now. Instead, they try to trap shorts. And we get the push back up, and we just keep on consolidating here on the 1 minute. So overall, taking a $131 loss. That's acceptable. That's half the amount that we risked initially. Don't take profits early. That would have been way too early regarding how much we risked. We never reached $250 in profit for just a 1-to-1. And that's gonna sum up the live stream for today. Definitely, I don't have any complaints about that. I can't win every trade. I think the opportunity was fair, and I think that NQ really wants to take out these highs now. So I don't think we're simply going to stop where we are at right now and hold resistance on this last bearish fair value gap. They've manipulated price. Good enough. We took out the previous hour's low right here at 505 and immediately moved away from it. Still had some hope at this point in time, but well, that entire idea for me is negated. It was not a 2022 model. I entered, it's not the trade day account as well either. It's only one of my funded 50k accounts, where I deemed it worth the risk, trying to practice being in line with the market makers. And that wouldn't fit the narrative that pushed back up. We will likely see these highs being taken again. And they just keep on manipulating. I mean, today's London session was total bullshit. Looking at it like right here. That's our entire London session. Now we close above our inversion fair value gap. Inside this old volume imbalance. Inside our 5-minute bearish right here. Let's check out the 15. 15 is going to close in 5 minutes. Also looking like we're going to close above the 15. I'm not going to hold to wait until maybe the 15. We only do some wicks. Cut the risk early. You really see that market structure shift, fair value gap, and then the delivery to the upside. Trapping shorts. 1, 2, 3, 4. Unfortunately failing to take out this low. Alright guys, unless you have any more questions, make sure to really, if to answer your question, 130. That's not even 0.25%. I have my limit for the day at 500. That's the first trade. London session was trash. Can be glad that we didn't lose more than that. Didn't even take a trade on the trade day account. Opportunity was there for it to form that top, but well, I guess just didn't want to do that. Just decided to, make sure all these longs get stopped out before reaccumulating and going long again. Similar to what we saw yesterday, we spoke about that, with less accumulation. All right, the DXY is pulling back. NQ is now back up. YM as well, pushing back up, but the London kill zone is over. Yeah, guys, really make sure to join the trade day Discord. I mean, we're already ranked number 10 on the leaderboard, invites leaderboard. Sorry, guys. So that would be cool. I know the first one already has 46 invites. Not sure who that guy is, but we have 600 people in here, and it would be cool to do a little giveaway for a 50k evaluation. Let's see. 3 random users win at least one invite, with at least one invite win a 25k evaluation. We will see how that goes. Right here we can check for the update. 5 invites, and that Mantas guy already bought me 16. But let's go. I'm gonna push that on Twitter as well and on YouTube. Make sure to join. I mean, it's for free. And then we can do the giveaway here for the community, and maybe you win, because not many people are so active participating in the giveaway. We usually have around 20 people, and the odds are pretty good. Alright guys, take care. That's gonna be the end for the stream. Let's take a last look at ES here before I close my window. I don't think that makes sense for us to drop down to the downside now. Maybe to form the M formation or the head and shoulders pattern right here, left shoulder, head, right shoulder. But I think NQ is going for these relative equal highs. This trend line liquidity right here. After making it look like it failed with that SMT divergence right here, we tried to get in on this inversion. That's where we got in. And this volume imbalance. No point in taking a 2-point profit target if our stop loss is already 2.5 points. Over the long run, that would only end up to, yeah, digging a grave for yourself, or at least for the account. I will upload this 3-hour recording to the YouTube channel. No trade on the trade day account today, at least for the London session. We will be back for New York starting at around 8:30. Let me actually check the calendar here. Check if we have any news on Thursday. Unemployment claims, but we get them every Thursday with the Philly Manufacturing Index. So nothing important anymore this week, like CPI or PPI. And I think that's gonna wrap up today's session. Alright guys, take care, and I will be back later for New York. Bye.